Hello again, everyone. It's Vince Four from TradingWinds.com, and this is our update for May 31st, 2021. Hope everyone's enjoying their long weekend so far. Let's take a quick look at how things finished off last Friday. Fairly quiet day overall, but we did finish mostly positive. The Dow up 65 points and continues to make its way to new highs, slowly albeit, but continuing to make its way towards all-time highs. If we look at S&P 500, was up just 3 points. Again, moving slowly, but still in the right direction. The Nasdaq 100 was higher by 12.5 points, hanging on above that downsloping 20. Still trying to get above this recent high here, and we're almost there. That's the May 7th high. We're pretty much there. The Russell 2000, which is full of small caps, down, albeit just 4 points on Friday, continues to remain in that range. If we look at crude oil on Friday, we were up 59 cents in crude, and still looks pretty good. If we look at gold on Friday, we were up $4.20, so still moving in the right direction there. Bond yields, the 10-year note at 1.584, so lower than we were last week. And the dollar index here on Friday continues to roll over. So there we go. We had another re-entry to the short side there. So we're sitting at 89.83. And we're looking for that retest of 89, which continues to look highly likely there. If we broaden the scope a little and start looking at the ETFs of the different sectors, starting with materials, we'll see mostly a bullish picture. So the trend continues here for materials. If we look at communications sector, still near the highs. Energy sector, right at that 20, but overall looking okay, and we could form a cup and handle type pattern there. Financials look great. That looks destined to move to new highs here very soon. Industrials look good. Technology hanging on above the 20, right? That's basically the Nasdaq 100 there, but still looking okay. Consumer staples hanging on. Real estate sector doing well. Utilities slightly below that 20. Not a huge surprise considering everything else. Healthcare still looking okay. Flat 20 there though. Consumer discretionaries about to retest that downsloping 20 now. So Monday, Tuesday here will be interesting. And the retail sales sector also pretty flat, but still remains above the 20. So again, the market still feels like it's at one of those points where we're sort of in between, and it could go either way. But when you look at the charts of the different sectors, still looks a lot more bullish than it does bearish. So that's the stance right now. If we look at news coming up this week, obviously today's Memorial Day, markets are closed. Tomorrow, that's Tuesday, we get manufacturing PMI, we get construction spending, and we get total vehicle sales. Wednesday, we get the MBA mortgage apps number, we get Red Book report and the Beige Book report. Thursday, a little more important, we get the jobless claims number, but we also get the ADP non-farm payroll numbers, so the private sector payroll numbers. We get crude oil inventories as well. And Friday, we get the full employment report. And Jerome Powell speaks as well. We also get factory orders and U.S. Baker Hughes rig counts. So this week, as usual, we will get a few earnings trickling in, earnings reports, but the big things come in Thursday, Friday. ADP job numbers, private payroll numbers, and then the full employment situation report, followed by comments from the Federal Reserve Chair, Jerome Powell. So I think this week we should expect a bit more volatility. It may be a slower start to the week, but as we get into the end of the week, we'll probably see some moves and some added volatility, which would be welcome, really. Things have been fairly slow lately, so a bit more volatility here would, I think, be welcome by this market. But you know, we'll have to see what those numbers are. But that's the big thing on top for this week. So tomorrow, Tuesday, we won't be having any event, but Wednesday we are back with another live market chat at 10 a.m. Eastern. I really hope to see you there. Until then, enjoy the rest of your long weekend, and we'll see you on our next update.